Hi, it's Ross McInnes from Australian Investment Research Services. Thanks for joining us. Close to the week was okay in a week where we've seen a very big revision to global growth outlook by all global markets. This had a big impact on the Australian markets this week, and we've seen a massive spike in volatility. This morning started with the S&P 500 down nearly 4%. And below the first technical level that we're looking at 1,080 at 1071. This was driven by a couple of factors: the uncertainty about the new US banking regulations, and the core focus on the fact that Europe is probably going to be in recession for the next 18 months to 2 years on the back of the sovereign debt issues. In respect of this, the S&P 200 Australian index opened down just over 3% at 4175, with the SPY opening or closing, in the SICOM at 4200 before that. This represented a 16.5% fall in the market from its 5,000 high in the middle of April, so clearly in bear territory. And again, it's going to be the focus over the next couple of weeks that the market can stabilise from here. Otherwise, we are going to get a real economic shock as we got back in 08 and into early 09. With this in mind, the markets, went sideways, but really what we're looking for is regulatory response and policy response. We saw the RBA today, as we mentioned last night, actually checking prices this morning at 81.50 at about 10:30 a.m. Sydney time. We're still of the view that they won't let the Aussie implode through 80 cents in any time in the next couple of days, given that the markets move so rapidly and so quickly, which will definitely damage business expectations and sentiment. So it's something to keep focusing on is the government and policy responses. Tonight, there's really not a lot out again. We've just had some UK debt data come out, or government debt data come out. It was reasonable. And the German IFO confidence indexes, which were a little bit off, but they came off very strong levels. So we still haven't really got any real data feedback from the last 3 weeks shock. And it is turning into a shock. So our view still is that from here, there are some buying opportunities. Obviously, as you've seen, the Aussie dollar bounce from 80.75 to 83.50, and it's trading at 82.20 at the moment. But we are going to, with respect to that medium-term buying opportunity, we're going to see a lot more volatility before this episode of sentiment's over, and we still really need to see a coherent response out of Europe, and potentially a G20 response as well, which really helped the market last April when we were still getting the momentum for the major rally that we had. So thanks for watching, and we'll do a week ahead report on first thing on Monday morning around 7:30, so stay tuned for that. Thanks for your time. Bye-bye.